How heated of a debate was this for you guys to make this adjustment to your forecast?
Well, Lisa, not really that heated of a debate. Ellen and I have been on the same page for some time, which makes our job pretty easy, actually. No, I think the idea is this. Look, the bond market is pricing in, at the time that we made this call, the bond market was pricing in about 60 basis points of interest rate cuts by the end of the year. And Ellen came to the view that, the Fed was going to deliver 50. And, the issue for the bond market, I think, has been for some time that it ultimately wants more from the Fed than the Fed has been willing to deliver. And so if the Fed is delivering less than the bond market really wants deep down inside, it's going to react in the way that it has, which has been a pretty dramatic bull flattening of the term structure. Just look at the 30-year bond yield, new all-time lows this week.
Yeah.
The 10-year yield has not made a new all-time low yet. Maybe that's in the offing, but the long bond is kind of telling you that the Fed has not done enough, given this environment, to actually make people feel like inflation over the long term is really going to show up.
So Matt Hornbach has looked into the soul of the bond market and found a lack of satisfaction from the Fed. What will it take for the bond market to be satisfied? An emergency meeting by the Federal Reserve and a 50 basis point cut?
That would help. That would help.
Do you expect that to happen?
No, not at this point. I actually looked at the history of previous intermeeting cuts, and what I found was that from the last meeting, you need the S&P to be down at least 10% and sometimes even closer to 20% before you actually saw an intermeeting cut. And we're not there yet. And, hopefully we don't get there. But, if it were to occur, then I think it might be more appropriate to start having that discussion about what would it take to get the Fed to come in and cut intermeeting. We're not there yet. We don't think this Fed is even close to being there. You need to see much more tightening in financial conditions for that to happen.
What's a Fed rate cut actually going to do? Honestly, at this point, given how low all-in yields are for both the consumer and for companies, how is a Fed rate cut of 75 basis points even by the end of this year going to materially stimulate the economy?
Yeah, well, I think Chairman Powell said it best during, maybe it was the only thing he said that was best in his press conference, was that, look, our policy, the Fed's policy, works through confidence channels. That was the great irony, and that not many investors that I've spoken to had a tremendous amount of confidence coming out of that press conference, but I think that he acknowledged, correctly so, that the Fed's policy has an important way of working through the economy and through the markets through confidence. And so that's what a 75 basis point reduction would get you, is more confidence the Fed gets it.
All right, so there has been one note in the bond market over the past few sessions: pessimism, 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 even as we see equities flip around. How sensitive are U.S. bonds to the trade headlines that are whipping around stocks?
Yeah, I think they're pretty sensitive, just as sensitive as the equity market. If you look at an intraday chart, you'll see spikes in, kind of the similar direction. Both things go down at the same time. What we do see, though, is a lot more sensitivity further out the yield curve, right? Which is, again, one of the reasons why we get the bond at the all-time low.
All right, so then let's say the Federal Reserve does cut rates by 4.6 times or whatever, as the bond market is predicting by the end of 2020, okay? Let's say this happens and we do get a trade deal. What is the risk of overheating?
Well, it's certainly higher than it is today. Clearly, but I'd say that's in some ways the Fed would be happy with that, right? The Fed hasn't had a lot of success at achieving its 2% inflation target for many, many decades now. So I think they would be kind of happy to see a bit of an overheat and get that inflation rate up to 2.2, 2.3%. They'd love to see that.
And then the 10-year yield, 1.6% ending the year. Is that the low over the next 2 years, or is it going to zero or negative?
Well, ultimately that depends on what the Fed does with its policy rate. I think if the Fed takes its policy rate back to zero, the market is going to be thinking about things like quantitative easing. There's already some discussions in the market about negative rates. So
you think that's possible?
Negative rates?
Yeah.
Personally, no, I don't see the Fed going there. But the discussion is certainly possible, and that, of course, will drag interest rates even further lower to great effect on the economy, hopefully. But we just haven't seen that yet.